Okay, the markets have been open a little over an hour now, so let's see what they're doing after we had the USDA weekly export sales numbers that were out. We'll try and review them here in a little bit. In the meantime, let's look at our current prices provided by bar chart. We'll start with the corn market, and on the big board we have July now trading a penny and a quarter higher. Every other time we look at it, it's either higher or lower. Now July is at 5.88 and a quarter right now, making a penny higher. December is down a half cent at 5.19 and a half. This market is just totally lost today. It doesn't know what to do. In soybeans, you have July 1 3/4 lower. We're at 13.22 3/4. That'd be 11 cents off of our overnight high here. And on November new crop soybeans, we're now down 5 3/4 cents at 11.79 1/4. Well, in the wheat market today in Chicago, you have July now 3 1/4 higher at 6.09 and a half. This is another one that every other time we look at it, it's higher or lower. We have September up 3 cents right now. In Kansas City, you have that July contract now 9 cents higher. We're at 8.21 1/4. That would put us about 19 cents off of our earlier low. We're back within 4 cents of our high of the overnight and early morning trade. Let's go to Minneapolis. July contract is now at 8.05, so we're 6 higher. You know, we got as low as 7.95 and a half before it bounced, and now we're about a dime off of that here so far today. In the cotton market, we'll go with July. It is up 60 points at 82.32, but hold the phone. You have December new crop down 26, and we're at 80.02. We've been at now 79.98. I was going to say it's been on both sides of that 80-cent mark. We have Ted Seifried on the line with us. He, of course, is with Zaner Ag Hedge in Chicago. There he is, looking all dapper and everything. My goodness, Ted, glad to have you with us here on a Thursday. We had those export sales numbers out, and we can flash those up on the screen here for everybody, but that corn number at a negative 23,000 tons, in other words, net reductions last week, that makes it hard to get this market to rally, doesn't it, when you have backward numbers like that?
Yeah, I mean, look, it's not a good number. We knew that was coming, though. We knew that there were going to be some big Chinese cancellations in there for corn, but I'm actually going to call that a small victory for corn. And the reason I say because last week, when we also knew there was going to be big Chinese cancellations in there, there were other cancellations that piled in on top of that, smaller ones from smaller countries. I mean, Mexico, Costa Rica, things like that. But in this case, this week at least, you know, there were some purchases by Mexico that helped offset the big negative number from China. So only negative 23,000 metric tons. I can't believe I'm saying that, by the way, Marlon, but only negative tons. Again, maybe a small victory there for corn. The bean number is interesting. I mean, we continue to sell old crop beans, even though South America, Brazil, is a lot cheaper than we are. So that's interesting. But we did not really see anything of note for the new crop bean sales. And I think November beans are taking that fairly poorly. Soybean meal being the big one there, though. Look at that, 391,000.9, 392,000 metric tons. Wow. You know, we saw a big sale to Singapore, was it? Or Philippines, sorry. Big sale to Philippines earlier in the week. But that was not included in this report. That'll be in next report. So this was a really big number that we weren't really all that expecting. Poland in there for 100,000 metric tons. So, wow, that's very impressive. And it also really shows how we are getting the business from Argentina that suffered from a major drought. They don't have quite the same supplies. So therefore, we're going to have to pick up some of that global soybean meal business. And we're seeing it. And that's really good. The concern that I have is that this might not be long lasting. Once Brazil gets really rolling on their crush after they just finished harvesting, they might step in and take a lot of that global excess demand coming from Argentina. But at least for today, and we know for next week, those soybean meal numbers are really very good.
Yeah, and everybody has to wonder just where the farmers are now setting their sights on new crop hedging. They seem to have the attitude that, well, they're not going to hold their sights as high as they had maybe 3 or 4 months ago. A little more realistic right now. So we'll have to wait and see if there's any weather problems that develop or not. We'll pause right here, and Ted will come back and we'll take a look at the cattle and hog markets here on a Thursday right after this. I want to start out this segment running through some of these outside markets for you today so you know what's going on. Let's look at the Dow. And the Dow Jones Industrial Average Futures currently show the June at 32,776, just a touch weaker. We're down 78 points as it stands here right now. Visiting the U.S. dollar index value, you have June futures 226 points higher. Now we're back up above 104. We're at 104.025. That could be significant. Keep an eye on that. On the West Texas crude, you have July down $1.83 at $72.51 per barrel after getting as high as $74.37 in the overnight and early morning trade. So that's a bit of a turnaround right there as well. Now switching over to our livestock trade on live cattle, you have the June a nickel higher at 166.15, but you have August 30 lower at 163.82. So again, another market with no sense of direction today. Feeder cattle, now they have turned lower. You have the August contract now 87 lower, 233.65 is the last trade, and that is, about $1.85 or $1.90 off of its earlier high this morning. And September down half a dollar now at 237.12. So a lot of give and take going on here in the markets. On the lean hogs, though, it's just take, sell, sell, sell. You have June lean hogs down $2.20. Look at the July down $3.05 at $77.77. Let's go back to Ted Seifried. Some people say, how can they keep selling lean hogs, and yet they keep proving that they can?
Yeah. A little note on the outside markets. We're down a little bit in stocks and crude, and the dollar's higher based on the Fed minutes that we saw yesterday. There's more concern that we're going to see the Fed raise interest rates again. Everybody's talking about a pause. I don't think we're going to see that. Hogs. Wow. We are now trading a fairly large discount. Well, we're trading discount to cash, and today we're making that discount larger. Weights are down, which means marketings are fairly current. I would think that we should try to find a bottom sometime in hogs. I've been saying that for a little while. It just hasn't happened. But the problem is a demand thing, right? You haven't seen the American consumer back away from high-priced beef and look for cheaper alternatives as far as proteins are concerned. We're paying the price for beef. We are not acting like there's a recession on the horizon. We've been talking about this recession for a long time, by the way, and really, from a spending perspective, we just haven't seen it. Yeah. So, the cheaper cuts of protein are the ones that have suffered, and that's a problem for hogs, and that is giving these funds reason to stay short or continue to get short. Yeah. It's a really quiet day, but I think it's a really good thing after the strong move that we saw yesterday. I don't know how to not be bullish cattle right now. I mean, the cold storage numbers were really very bullish. We've got a tight supply situation heading into our peak demand time of the year. I don't know why we'd stop here unless there's a big consumer demand.
That's a good point. Yeah, a lot of truth in that. All right. Well, thank you, Ted, for joining us here today. Appreciate that. We'll talk again soon. Ted Seifried of Zaner Ag Hedge in Chicago. So